Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 14th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. The more people like this video, the more it will be seen by other people, because YouTube ranks videos with highest number of likes first. So please, again, don't forget to hit the like button. Today we'll look at stocks. It was a volatile week, but stocks really went nowhere. Downtrend in stocks still remains a big long-term downtrend. High yield bonds are also most likely going to close at 52-week lows. This is overall bad for stocks. I'll explain why. Is Tesla stock being punished because of Elon Musk's Ukraine comments? We'll look at that. Subscribers are short Tesla stocks. Forex markets, big volatility again, but so far dollar was not able to drop significantly, and gold disagreed with this drop. Also, I explained what I mean. Crude oil is at the pretty critical junction. It could collapse or it could rally. It's really either way. And Bitcoin again is bouncing along the bottom, but I think the bottom is significantly lower. And if you're a subscriber, then stay tuned. We're going to cover not a lot of stocks you can see this week, but again, we're going to cover natural gas, Brazil, travelers insurance, Walmart, ChargePoint, Win, new stock KE Holdings, and another one, Trade Desk. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com. There's also a link in the description. Click on sign up, and then I have several products. One of them is trading indicators, and this is what we're gonna use throughout the presentation. So looking at this chart of S&P 500, you can see there are 4 lines on this chart. There's the green, blue, red, and yellow lines. So these are my indicators, proprietary MasterCharts Trading price action indicators, and I use them exclusively to trade stocks and Forex. So the way I use them again is during the bull market, we're going to be buying every time stock comes down towards the blue line. For example, here's an opportunity for it to be bought back in January of this year. During the bear market, how do I know it's a bear market? Bear market starts when stock closes, in this case S&P 500 closes below the yellow support resistance line and then bounces towards the red line. So that's when we sell short. So currently we are in a bear market downtrend. I wanted to show you last 2 days of action. Very volatile. I mean, especially yesterday, the Thursday, the 13th of October, huge move to the downside, and I thought that's it, we're gonna just unravel completely. Something happened in the middle of the day and we got a rally. Now today we still have about 40 minutes of trading time, so the way things are going, it just doesn't look good. We kind of dropped in the morning, or rather we've been pretty much dropping throughout the day, rallied a little bit, but overall this doesn't look like a good close to me at all. Looking on the weekly chart, notice this last week's action. So when I say weekly, I mean that each candlestick is 1 week's worth of activity, and you can see W meaning 1 week. And then also, if you're trading with my indicator lines, you need to change the settings by clicking on this wheel where I'm hovering, and then change it to 52 if you're doing weekly charts. So notice this big amplitude candlestick. This is called a spinning top, pretty much. So spinning top meaning that the real body is right in the middle, small real body. There's a shadow at the top, shadow at the bottom. But so in other words, there was a lot of movement throughout the week, but overall the price didn't really go anywhere. So this is Indecision. However, clearly we have a downtrend remains. So bear market for S&P 500 again started back here in April of this year, and since then we had multiple opportunities to sell it short. Latest one was on the week of September 12th, and you obviously made good money here. So right now I have this dashed line with a question mark. Can we rally? Yeah, I mean, this is a hammer candlestick, from yesterday. Hammer meaning that it looks like a hammer, literally. There's the handle at the bottom, and then there's the real body. The green real body is like a head of the hammer. Usually hammer candlesticks indicate the bottom of a downtrend, but the way things are going today, I just don't know if it's gonna be enough, really. So maybe we'll rally, but overall, the downtrend remains. So if we rally, and I notice where I'm pointing, so I'm pointing towards this green line. This green line currently, the red line currently is at 3991. So yeah, if we rally, well, most likely we'll rally towards that area. And at that point, it will become again a great place to sell short. Notice two previous short signals, one on Friday 26th of August, another one on Tuesday 13th of September. So if we rally, it will be a counter trend rally. Trend is down, we're gonna rally towards up, meaning counter trend. So I would not necessarily look for a buying opportunity yet. It doesn't look like we're done with a bear market. Long term, I'm gonna zoom out on the weekly chart, and we can see the pandemic low. So pandemic low is at 2200 or so. I think we can easily reach that level from today's prices. That's another 40% down. I don't think we're even remotely done with the downtrend. Looking at Dow Jones, pretty much the same picture. Dow Jones and S&P pretty much moved together. Previous counter trend rally was truly epic. So it started here on Friday the 17th of June and ended right there on 16th of August. Notice how it went exactly towards this blue support resistance line. It stopped there and then rolled over, and we had two great short signals. If you got in, congratulations. We recently hit new 52-week lows. Again, today's candlestick and this week's candle, we can look at weekly. Dow Jones slightly stronger than S&P, but overall downtrend remains. We have new lows here, and this is once again sort of like a spinning top candlestick, not really decisive in any way. Yeah, once again, I'm not excluding the rally for Dow Jones either. We could rally like that much towards the red support resistance line. That would be around 7% or so, and at that point we'll look for opportunity to sell short. NASDAQ actually is gonna close at new lows. So yes, we had a hammer candlestick right there. Yes, it's a wonderful bullish candlestick. So people who read candlesticks, sort of we need to be in a, how can I put it, need to interpret the situation of how to read those candlesticks. So yes, it's a bullish candlestick, but we're clearly in a downtrend. So lower, what do you call it, during downtrend we make lower lows and lower highs, and yes, we made a lower low. That doesn't mean we cannot make another lower low. So interpreting candlesticks is like important, but not terribly important. I think you need to grasp overall strategy of what we want to be doing. So like, for example, here for NASDAQ, bear market actually started even earlier in March of this year. Notice where it closed below the yellow support resistance line. It rallied. We had a great short signal here on Friday the 8th of April. It was a huge run to the downside. Another 2 opportunities to sell short as late as August of this year, and a huge run to the downside again. So can we again rally? Yes, absolutely. But once again, this would be a counter trend rally. So we'll be looking to sell it short. We'll be looking to fade the rally. But even as we speak, since we haven't closed yet, looks like we're going to close at new lows. And new closing low is not really a good sign at all. Here's the weekly chart of NASDAQ. And yes, indeed, we're looking at a new low, new closing low for this security. Yeah, and once again, the pandemic lows are actually not that far off already. Only 38% away. For NASDAQ, it's not that much. I mean, it seems like a lot, but yes, we can drop that much and then continue lower. The reason I'm going to show it to you, I'm going to show you Chinese shares. So let me see, I'm going to give you Chinese Hong Kong market. This is actual Hong Kong 33. So this is the pandemic lows that were set in March of 2020. Notice they were broken in March of this year, 2022, and notice how much lower they are right now. The prices right now, they're at 10+ year lows, if not more than 10 years. Yeah, notice we just broke 2011 lows. So yes, NASDAQ can do the same thing. S&P 500 can do the same thing. Can Federal Reserve blink and start decreasing interest rates? It can. And I think that was one of the recent events when we had a recent rally. I think this is right here from last week. There were speculations that Federal Reserve will start lowering the interest rates, but the inflation came in really hotter than expected, and I think we're gonna expect higher interest rates, and stocks apparently do not like higher interest rates. Here's Russell 2000. So overall, again, very similar picture. Russell 2000 began its downtrend even earlier. This is January, where I'm hovering, January of 2022 of this year. This is the beginning of a bear market for Russell 2000 small caps. Several opportunities were marked by a downward facing arrows to sell short. Latest ones were as late as August 26, with a nice move to the downside. Again, on yesterday, Thursday, the 13th of October, we made a new low, but rallied later in the day, and now again it's basically been negated, all of this rally. So by and large, I don't see stocks turning around right now. High yield bonds, junk debt. So once again, I'm going to look at junk debt here. Here's the high yield bonds, JNK. So this is unadjusted chart. So adjusted versus unadjusted chart. Unadjusted chart means we're looking at the price itself. Where I'm hovering is says ADJ. We can adjust it for dividends. So if with dividends, you can see the shape of this chart is somewhat different. If we uncheck it, you can see the shape of the chart is quite different. In fact, we're very close to a pandemic low. We're right there. We're touching the low from week of March 16th, 2020. Pandemic low is slightly lower, so I would expect some sort of a potential bottoming action there. But once again, the way things are going, I just don't feel like it's going to hold. So if we're going to break below this pandemic low, we could really fall. pretty hard, pretty far. If we just imagine that this is okay, so the depth of this pattern, again, this is an extrapolation, but let's say this is the depth of this pattern, that's 24%. So easily we can see that much to the downside after the breakdown. So we're looking at junk debt in the 60s. How would that translate to S&P 500? It'll be pretty bad. I think once again, when I showed you S&P 500, there it is. So the pandemic lows is just the beginning, and we can really drop after that. So junk debt, why am I talking about junk debt in general, is because of the correlations. So high degree of correlation. Notice this chart at the bottom, the yellow part. This is the correlation between S&P 500 and high yield bonds, and you can see that they are very positive. So when high yield bonds go up, stocks also go up, etc. When high yield bonds go down, stocks also normally go down. So we're seeing, in this case, we're seeing high yield bonds lead to the downside. So bear market for high yield bonds began in January of this year, whereas we can say that bear market for S&P 500, again by my metrics, meaning that it's a drop below this yellow line, began in April of this year. So if we're saying that yes, indeed, junk debt is leading the market lower, and it appears to be so, then the lows from the pandemic is just the beginning, and we are literally there right now. We're literally approaching those lows from the pandemic. So the important test is coming up, a few percentage point lower for junk debt. I think some sort of a bounce is to be expected there. So let's watch and see when or if high yield bonds reach that pandemic low levels. But as of right now, it just doesn't look good once again. Okay, so I wanted to show a trade that we did. So this is Tesla, a famous car company, of course. So Tesla, once again, began its downtrend right there on May 20th of this year. How do I know? I only need to know one thing. I don't really need to know anything about their finances. I don't need to know anything about what their Elon Musk is saying. All I need to know is I need to look at this price. And so right there, the price has closed below this yellow support resistance line. This means bear market. That means we need to look for opportunity to sell short. Subscribers were indeed alerted right there on August 30th, and once again on 23rd of September for an opportunity to sell short. So at this point, if you're a subscriber, you are already plus close to 25%. We have earnings coming up. So earnings projected to be 1. This is I guess per share. So what's going to happen in a couple of days is Wednesday, October 19th. So I wonder if we're going to see some sort of a huge earnings miss. And let's look at a weekly chart of Tesla. Yes, it had a huge run. I had no problem. This is an actual alert, by the way, right there on April 20th. I'm sorry, Monday. This is week of April 13th of 2020. So yes, if you're a subscriber, you got this alert and you were able to get this huge gain from 46 that went to 290. Now, lately, there's the beginning of a bear market, May of 2022 this year. I'm gonna zoom in and I'm going to look at this latest action. This is a weekly chart, meaning each candlestick is a week's worth of activity. So let's look at this pattern first. So this is this pattern from May of this year until now. This is a bearish pattern, usually meaning that we have a sort of a, they call it, I guess, inverted cup maybe, or inverted cup and handle. Maybe this is a handle where I'm hovering and this is the actual cup. And as we speak, Tesla is breaking this level down. And if we measure the depth of this pattern, it's about 30%. So it is reasonable to expect a duplication of this pattern to the downside. So we're looking at least 30% to the downside for Tesla. But once again, I think that is a very conservative estimate, and I think we could easily correct back to the pandemic lows. So how much? It could go a lot, like 80% down. I think it's reasonable, once again, to at least expect, a similar duplication of this pattern to the downside. And we will find out very soon, because we can see the earnings are coming up relatively soon, in a couple of days. Let's see if the investors decide to punish Tesla. I'm not sure why this is happening, and most likely because of a general slowdown due to various factors in the world, not the least of which is, of course, war in Ukraine, for which lately Elon Musk has been getting a lot of flack, because he seems to be implying that we should be negotiating with a terrorist state, in this case Russian Federation. And I'm saying terrorist state because it was recently proclaimed so by the European Union. So don't know. This is just my idea of why Tesla is being punished. But I think more importantly, it's because of the way the technical pattern is, and this technical pattern is bearish, meaning that continuation to the downside is quite likely here. Right, looking at dollar, so let me look at the weekly time frame for dollar once again. So inflection point for the dollar came right after our shameful event of January 6th riot in the Capitol. I'm sorry, this is July 2021, but yeah, I'm sorry. I meant to say this beginning of a bull market started right there in 2021 in July, and actually it never stopped. Latest candle is gonna close at new highs, so we're gonna close at new highs. I thought we were topping here last week before that, but clearly we were not. So several currencies just went to new lows versus the dollar. Here's the USD JPY, USD CAD, USD is winning. Australian dollar versus United States dollar, new low, and then Swiss franc. Notice a new high. So all of those, euro is very close to new lows versus the dollar, and British pound also is quite close. I mean, it made a new all-time low actually here just a few weeks ago. So I don't know if this is the top for the dollar. It doesn't seem that way. I thought that, so looks like I thought we're gonna be having a high here on 28th of September, and then maybe this was a lower high on yesterday, on Thursday, the 13th of October, but doesn't look like that, and we might actually continue higher, especially with other currencies breaking down. So this again doesn't look good for precious metals. And here is gold. Gold also is currently in a downtrend. Beginning of a downtrend for gold started right there in May of this year. We had several opportunities to sell it short, and again it's approaching new lows. So far, very feeble bounce here from in September into October, so doesn't look good. So deflationary forces are indeed more pronounced right now. And here's oil. CL1 exclamation point is the symbol here on TradingView. So oil again is in a downtrend. We had a pretty strong rally here from September into October. OPEC cut production. Again, this was interpreted as a plane to helping to Russia, because the higher the prices are on general markets, the more money Russia can get for their oil, and the more weapons they can produce and buy, and then kill more Ukrainians. Unfortunately, this is the way things are going, but maybe general deflationary forces are at play here, and even with the OPEC cut, maybe we're gonna see lower prices, because we're seeing these are short signals. One happened right there on Wednesday the 12th, and today also a short signal. Short signal occurs when we make a high above this red support resistance line. Again, you can find out more about my indicators by clicking in the description, and then close below it. So this is a short signal. Let's see what happens. I mean, if the short signal works out, we can easily see lower 70s for oil. If the opposite is true, and demand actually picks up as a result of something, I don't know what, perhaps some sort of something happens in the Ukraine war, and for example Ukraine wins and everything just goes back to normal, and Russia just goes back to their what seems to be beginning a civil war inside Russia, and I think if this continues much longer, there will be a civil war in Russia, and things will go back to quote-unquote normal. Maybe oil will rally in that case. But again, these are political events. I'm trying my best not to be influenced by the political events and just concentrate on the chart. If I do nothing and I remove everything, then we need to be selling it short right now. And looking at Bitcoin, once again, this is very weak, extremely weak security. Last opportunity to sell short this security. Actual alert, again, these are downward facing arrows, several alerts that happened to my subscribers. Latest one was over 60% successful, 60% gain, or in this case because it was a down, you could play it to the downside by buying puts on security called BITO, B-I-T-O. It's a ETF, so you can actually play it now to the downside at retail level. Right now it's just not doing, it looks very weak, very vulnerable. Here is a weekly chart, and I drew a line here from the lows from 13th of June. It looks so weak, it looks ready to collapse. If it collapses, it could go to nothing. So if you're a subscriber, don't forget to hit first of all, don't forget to hit the like button. Again, your likes are exactly what keeps the channel going. If you're ready to subscribe, head over to MasterChartsTrading.com, click on sign up. I have 2 products and 2 packages. Trading indicators are these lines on the chart. you can have them for your chart on TradingView.com. So TradingView.com, you only need a free TradingView account to enjoy my indicators. Once you get a free TradingView account, send me your name of your login. I don't need your password. Just send me a login and I will turn the indicators on for you. If you need my newsletter, so again, I send out daily alerts. You get daily alerts and the weekly video for members only of what we trade, how to trade it. It's all there. The best deal, of course, you get both trading indicators and newsletters at $59.95 per month. I think it's a great deal. And if you need one-on-one sessions, then you can sign up for that as well. Alright, that's it for this week's recap. Again, if you have any questions, please let me know. Don't forget to hit the like button. Thank you for watching and have another great trading week. Bye-bye.